Hello, my friends. It's Robert Miner with Dynamic Traders Group. I don't have a video of me, the talking head, with today's video because I want to knock this off pretty quick. Got a lot to do to prepare for the holidays coming up. But I wanted to get a quick video out. We're going to look at three markets that are very popular with my YouTube videos, and that's gold, crude, and the dollar, and specific trade strategies for the next few days this coming week. And I think there's some really good setups. So whether you're interested in these markets or not, you might want to listen to the whole video, because everything we talk about you can apply to any market in any time frame, and you can learn how to trade and manage trades. That's what we're all about here. We don't forecast, don't predict the future. I identify conditions with a high probability outcome and then a specific trade strategy to take advantage of those positions. So let's start with gold. So this chart is GLD. It's the gold ETF. I'm going to use that today. And it's the daily chart, and it's the close only. Now you can look at some of my videos. I've gone through the long-term position, or I should say the probable long-term position for gold in recent videos. You can take a look at those, and you'll see the importance of the October 2023 low. And the probable outcome from that would be a bullish trend to substantially higher levels. Well, where are we at as of today? And this is what's important, is that in the past week or so, off of the December 1st high, gold has made a three-section decline for a potential ABC. And what's important is last week on Thursday, it closed above this little swing high I have labeled as a wave B. So more than likely, this is a corrective decline that is complete. And that's pretty important. And it was complete right at the 100% alternate price projection of the wave A from the wave B. That's a typical target for a wave C. And this was also the, I think it was a 62% retracement of this advance from the November low to the December high. So what this tells us is that more than likely a correction is complete. More than likely the trend is going to continue bullish, and it should not exceed and make a close below the December 12th close. What does that mean? Well, that means that if you're long, and you should be if you've been listening to my videos anyway, is that your stop should be a close below the December 12th close. There's no reason to have a stop further away from that. It also indicates that gold is still in a position to accumulate long positions, again, with a stop below the close below the December 12th close. Because if gold, and I should say the GLD, should decline and make a close below that level, it would void this as a correction. So there's just no reason to have a stop further than that. Again, this is crude, which we've looked at a couple of times in some Twitter updates and YouTube updates. And last week made potentially a fairly significant reversal right on the OPEC announcement, coming off of the September high. Just a nice clean 1, 2, 3, 4, 5. Five wave impulsive decline. Last week came right into the end of wave 5 target zone, made a weekly bull reversal with a higher close, and it made a dual look-back bull reversal in the weekly momentum cycles. So that puts everything together for a probable weekly low and a wave 5 low. This is the main thing you really want to, or one important thing at least, you really want to be aware of. 5-wave impulse trend down that should not complete a correction. So this low, if it's confirmed, should not then begin a bull trend that will continue to a new high. The bull trend should be a correction within a higher time frame bear trend, because 5-wave section should not complete a correction. So be that as it may, more than likely a weekly low is complete, sideways up for 3 to 4 weeks. That's a pretty good trade setup you want to be aware of. Let's quick look at the daily data. That is crude, and this is the February contract, or the January contract of crude. And again, came down a nice 5-wave decline. And then what happened on Thursday is it made a close above this little swing high close. That's what we call a pattern reversal signal, that more than likely that weekly low is complete. So what I do in this case is once that low is in a position to have been completed, as it is now, and because the daily momentums are overbought, that means there's probably a daily high within a day or two. Typically, I'll wait until the next daily momentum cycle and bull reversal to then position. That will usually be following the initial correction against this new trend. This is a dollar index weekly data, and more than likely, the dollar is in a position to complete a weekly low. That's a low that would last 3 to 5 weeks. So that's a good trading position. We don't want to lose sight of the fact that this is September 2022. That's a high in the dollar that'll probably last several years. So any rally and advance in the dollar should be a correction against a much higher time frame bear trend. But we're just looking for trades that'll last a few days. And I think the dollar's in a position within the next day or two to really be that kind of setup. So coming off of the October high, again, looks like a nice 5-wave decline this past week, spiked lower. A lot of people get real bearish. But what we know is the weekly momentum cycle is dual look back bullish from the oversold zone. That indicates a weekly low is really near. And this past week, the spike down came right to the end of wave 5 price target zone. So everything's in place to complete a weekly low. This is the daily data, and again, 5 waves down, 1, 2, 3, 4, 5, right into the end of wave 5 target zone. The daily momentum just reached oversold on Friday on a higher close. More than likely, that weekly low is complete, but we certainly have to see the bull reversal made in the 8 daily momentum are a close above the November 28th, this little swing low close at 102.649. That would be a closing overlap. It indicate that that weekly low is complete and the wave 5 low is complete, and the dollar is likely to be sideways to up for 3 or 4 weeks. Great trade setup, keeping in mind that that advance is likely to be a correction, and when the correction is complete, then the bear trend will continue. So there's 3 great markets and trade setups, more than likely at least, coming up in the next week. If you liked what you learned today, go over to dynamictraders.com, check out our DT report, as well as we've got a very complete trading course called the Dynamic Trading Master Course. Lots of information about that on our website. I hope you have a fantastic holiday season. I won't be back next week because that's holiday time. Should be back in a couple weeks with another educational and trade setup video that I hope you find useful. Everybody take care. Robert Miner over and out for now.